We're a few seconds away from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Rebecca Choong Wilkins with David Ingles. Now, really, we're starting the day with a lot of political news. Of course, that Biden farewell speech, but also this news of a potential ceasefire in Gaza, as well as these tariffs potentially launched by Canada. Now, both of those things, sort of the gyrations of this pending Trump presidency that's coming in, we're already really so acutely starting to feel that here in Asia.
We are, and I mean, it certainly showed up in the form of an oil price and certainly a conversation to have whether or not the premiums already been priced out in anticipation of this. There's also the inflation story, speaking of energy prices,
right,
that's also playing out across risk assets. And as you can see, at the open, on the onshore markets today, tailwinds are being felt just about across every corner of the region right now. 0.5% on the CSI 300, and as you can see, most of these big, heavily weighted stocks, bottom of your screens, are also feeling those tailwinds coming through. The open in Hong Kong, which is arguably a lot more outside-oriented than the mainland. Very quickly, have a look at that, and there we go. Yep, up about 1.5% in the early goings here on the tech gauge. Flip the boards, please. And the story really across the region is not so much an exclusive one to Hong Kong and mainland China. It's really almost this everything rally, with the exception of the U.S. dollar that's taking place. Relief rally as CPI came in slightly or a touch softer than estimates, and certainly the pricing around the Fed and that future rate cut, and the next rate cut at least, being brought forward now from September to, as you can see, July. Let's have a look, please, at the Asia situation right now across the board here. So lots to consider still. We'll talk about Korea in a moment. Top of the next hour, Jakarta comes online, and we'll be watching that market specifically more closely than usual because of the surprise rate cut coming through out of BI, Bank Indonesia. Everything is on the way up, and as you can see, the yield picture too in the U.S., 2 and the 10-year yield reversing some of the, by the way, very steep drop in yields overnight. The U.S. Treasury Index, the Bloomberg gauge of that, had the best week in several weeks overnight. As you can see, the Japanese 10-year yield, Aussie 10-year yield following what we had in the Treasury markets overnight. And just very briefly, speaking of surprises, BOK standing pat for, I think, the first time, really, in 3 meetings. And unexpectedly, so as far as markets go, I think when you look at pricing right now, it seems to be U.S. inflation seems to be the more dominant theme right now, although it's worth noting that we're coming off highs a little bit in the equity market and also the bond market over in South Korea. Okay, let's put everything together for you. And as we go through that, just to mention, we're getting more lines coming through here out of the BOK statement that it will be examining the pace of rate cuts to ease the downside risk to the economy. Mark Cranfield joins us out of our MLive team in Singapore for us. Yeah, Mark, it's good out there today.
Yeah, everyone's happy. I see lots of green across my equity pages today. I think what you're getting is some huge relief. Although I tried to diss the CPI numbers yesterday, massive relief that they came in on the soft side. Now, you can say a number of things here. Obviously, market positioning is a big factor of that. People went in on the bond market point of view considerably short, so there's a big short squeeze there across the bond market. Equities hadn't had a great start to the year, and there's massive relief that there was even whispers the Federal Reserve may even need to hike by the end of this year. That clearly looks like a very big hurdle now when you consider this CPI number. Of course, everything can change once Donald Trump gets into the White House, because it's a backward-looking indicator. It tells us about what was happening up to the end of last year. Depending on what policies are put in place from next week onwards, of course, the outlook could change considerably. But it will be certainly a factor for people to say at least we're coming from a lower base, and the chances are that the Fed, they're not going to be able to lower interest rates. And once again, the market is going to get ahead of itself. They're going to even start thinking about rate hikes in the third quarter of the year. That's way too early, most likely. But when positioning is so skewed one way, of course, it swings back the other way. Now people will go to the other extreme until we get more clarity on who is going to be hit by trade tariffs, how much taxes are going to be cut, how much stronger the U.S. economy is. Look at the bank earnings yesterday, absolutely incredible. JP Morgan, $50 billion in a year. I mean, that's absolutely amazing. No wonder equities are so happy.
Mark, just to your point on the sort of uncertainty of just how reassuring or how long-lived this calming effect might be for markets, but a couple of surprise pieces of news. The BOK, of course, not cutting as we thought, and then Bank of Indonesia actually now surprised us with a rate cut and this intervention in the FX market. Just break down what some of those surprise moves mean, how investors are digesting that news.
Oh, it's great for foreign exchange traders. We love it when it's unpredictable like that. So it's bringing back the old days, really, in the foreign exchange sense. Clearly, there's a battle here. Central banks in general, Asian central banks especially, are considering what does it mean in terms of allowing their currencies, how far can they be allowed to fall in relation to the major currencies? Well, one of the comforting things for them is that if you look at the G10 space especially, there are so many beaten up currencies there, the pound, the New Zealand dollar, Australian dollar to some extent, that even Asian currencies which are allowed to decline are not going any more extreme than what you've seen in the G10 space anyway, partly under the cloud of an enormously strong US dollar. So Bank Indonesia is surprised, but allowing their currency to weaken a bit is within the context of a very, very strong dollar dominating the emerging market space anyway. So they can get away with it to some extent. Bank of Korea here is probably only buying a little bit of time. They will surely want to lower the interest rates again. It is probably simply because no matter, they're talking about other factors, but this is purely a political decision. They're waiting for the political conditions to settle down, waiting for the president to be charged with whatever it is since he's been impeached. There's going to be some conditions set on him there. They just want that to die down, and then they can get on with lower interest rates. Doing so in the middle of a political crisis is not usually a smart move, and the Bank of Korea have taken that into account. That's really what it's all about. Not much to do with other factors such as currency and inflation, if truth were told. And then you look ahead, you've got Malaysia coming up, Singapore coming up. China still needs to lower interest rates as well. Pretty exciting time to be an Asian foreign exchange trader.
Bloomberg MLive strategist Mark Cranfield in Singapore. Now, another of our top stories today, Israel and Hamas agreeing to a ceasefire deal that includes a 6-week pause in fighting and the release of dozens of Israelis held hostage by Hamas, along with hundreds of Palestinian prisoners. Senior editor Bill Ferries is with us. Bill, just break down what we're seeing in the latest ceasefire agreement. It looks very similar to what we were seeing in August. What's actually changed since then?
Well, not a lot has changed in terms of the outline of the agreement that we're still waiting on Israel to formally accept. It involves a 6-week pause in the fighting. It involves the release of about 36 hostages, about 24 of which are believed to be still alive, according to our reporting. It requires the Israeli military to pull back away from urban areas and allow hundreds of aid trucks a day to start flowing back into Gaza. But what has changed, of course, is the reality on the ground. Hamas's leadership was decimated in that time. It's Hamas's key patrons in Iran and Lebanon have also suffered a lot of damage to their leadership structures. So it's a very different political environment and, frankly, a different military environment. Hamas still exists as a force. Israel hasn't eliminated it as it sought. But it is an important first step in a conflict that's been going on for 15 months. There's still going to be a lot of negotiations over what we're calling the phase 2 of the agreement. That would be basically a permanent end to this conflict, and then a phase 3 that President Joe Biden was just laying out in his farewell speech, which would involve final transfer of remains. This is still very much a tentative deal. It could extend beyond the 6-week agreement we have, but it is, I think, a positive step for everybody involved in what has been a long-running conflict.
Bill, I think you highlight a key nuance there: the risks between where we are currently and phase 2.
Yeah, so, this is very much a temporary ceasefire. Hamas and its allies have been pushing to have this basically be a permanent end to the conflict. Israel has pushed back on that. They say their goal is still the elimination of Hamas's political and military power. That has not happened yet. Hamas has been recruiting fighters through this whole conflict. They continue to push back on Israel in certain areas. So the fragility of this agreement is very real. And so the deal is, if negotiations are still continuing at the 6-week mark, then that the ceasefire can continue. But if negotiations break down over a final peace, you could have a resumption of conflict at the end of it.
Bill, thank you so much. Bill Ferry's there with the latest on the ceasefire in Singapore for us. Just a look at some of the movers. 9 minutes into the cash market session here. SMIC is a big one to watch. We're looking at a fairly substantial move in the stock. The biggest points contributor right now to the Hang Seng Index, up 6.5%. Might be down to the fact that you had this story around TSMC and maybe limits there to how much it can actually sell into the Chinese market. Perhaps that could be it, but as you can see, of course, it's a broad rally across a lot of these sort of high duration assets on the back of lower rates and the prospect of that. TSMC, by the way, want to watch specifically, out with earnings as well. Keep an eye on that. Very quickly, Asian financial stocks, lower rates might mean, we'll see, there we go, slight modest upside to some, not all, in Hong Kong property stocks on the back of a similar story. If we do get lower rates in Hong Kong, if the Fed does, of course, deliver in July, that could be a tailwind. And as you can see, that's playing out in the early goings, Rebecca, of the Thursday session.
Yeah. We're speeding through the week.
Yeah.
And still ahead, we dive into the future of quantum technologies and the recent volatility in some of the sector's stocks. Jack Hidary, CEO of SandboxAQ, joins us for that conversation next. This is Bloomberg.
Right, welcome back. You're watching the China Show. A recap in case you missed this massive rally overnight in quantum stocks. You know, this group has actually delivered quite a bit of alpha if you look at it over, the last 3-4 months or so. Had a bit of a scare recently, that massive drop following comments out of Jensen Huang that quantum computing might be, at least useful quantum computing might be like 2 decades away. And then we had a rally again overnight into where we are right now. Bill.
Yeah, well, that's it. I mean, it's sort of been a bit of a whipsaw, really, and it all comes back to NVIDIA. So, yeah, you said we had Jensen Huang's comments last week. Overnight, they also said at the upcoming GTC conference, which focuses on AI technology, it's going to have its first ever quantum day, and that's why you really saw that big rally off the back. The focus isn't just on the future, it's also on the applications that are already in use today. And so I want to get more on that now, bring in our guest this morning. This is Jack Hidary. He's the CEO of SandboxAQ. AQ because there's AI and then there's also quantum in the title, and it really speaks to how these two technologies are being used together. So, Jack, thanks so much for joining us. We'll get to SandboxAQ in just a moment, but first I do want to get your reaction to not only what Jensen Huang said, but also to this now inclusion of quantum in the upcoming conference.
Annabelle, great to see you. Great to be here live on air with you today. It's a very exciting time, both for AI and quantum. First, I should say that when we look at AI, there's really 2 kinds of AI that are now emerging. And NVIDIA will be speaking about this, I think, in their upcoming conference. There's the language AI, which we all know about, ChatGPTs, Google Gemini, all the wonderful language AIs out there, LLMs as they're called, large language models. But there's also quantitative AI. And quantitative AI, large quantitative models, incorporate quantum equations into the AI, and that's running today on NVIDIA GPUs and on other specialized chips. So that's happening right now. Even before quantum computers arrive, we're doing molecular modeling. The industry is doing molecular modeling on NVIDIA. NVIDIA is very, very focused on this, on scientific and quantitative AI. This is an emerging area that will get big play, we believe, in 25 and 26. On your question about quantum stocks and quantum computing, it's certainly scaling well. The Willow announcement from Google was a major milestone demonstrating that error correction can work. That was just a few months ago and obviously sent a lot of the stocks up. There were some moderating comments by others, but net, if you have a mid to long-term view, you're going to want to have exposure to quantum because of its massive impact on computing and on life sciences, on chemicals, on financial services, on most of the major sectors in the economy today.
Yeah, it really promises a lot of different breakthroughs. But SandboxAQ, the focus is on sensing technology in particular. So there's a lot of different use cases of that. But how are you applying it and how are you integrating AI as well?
Annabelle, there's so many applications now of quantitative AI, these LQMs that we just talked about. First off, look at biopharma. Just came from the JP Morgan conference, the big healthcare life sciences conference that they hold every year in San Francisco, and presented there. And what you're seeing happening is that we can change the curve. Right now, before AI, it takes about 5 to 10 years to get a drug ready for phase 1 trial. Then it goes to 5 to 7 years of trials, and most of those fail. We can now bend that curve with quantitative AI. Language models, Annabelle, not really fit for purpose for developing a new medicine for cancer, for Alzheimer's, for others. But AI that's trained on chemistry, AI that's trained on biology and pharmacology, this is the LQMs, not LLMs, but LQMs that really are impacting things right now.
Yeah, that's it. Some people might say that we've sort of over-indexed maybe a little bit on LLMs so far, but LQMs, to your point, just talk us through again more details. I mean, they're quite difficult to train these models. How do you go about doing it?
It's a fundamental question you're asking. So in the case of large language models, we know how they're trained. People hoover in the entire internet. You need a lot of words to train these language models like ChatGPT, like Gemini, and others. In the case of large quantitative models, we do not take anything from the internet. No data coming from the general public out there. Instead, we're using equations. The equations that have been given to us by the greats, Schrodinger and many others, that tell us how electrons and atoms interact with other electrons and atoms. So if you have a drug candidate and you want to see if it's going to bind to that receptor, that target in the body, we can train on a data set developed by the equations themselves. So this is very pristine data. Unlike the language data that's very fuzzy, you get a lot of hallucinations. We don't see that in the quantitative world. We're getting pristine data out of the equations. We're building data sets. This is a big difference, Annabelle, in the LQM side. We have gen data. We generate the data. This is new synthetic data coming out of the pristine equations, training the neural networks, and then coming out with a handful of solutions that then, of course, are validated and tested in the laboratory and then ultimately in trials. This has now been cutting down by 6-7 years the time it takes to get a particular compound to clinic. It's cutting hundreds of millions of dollars off the cost of developing drugs. Ultimately, this leads to lower cost drugs for more people.
Obviously, as well, that there's a huge amount of interest in this from investors, and you just closed your latest fundraising round at a valuation of $5.6 billion. How are you planning to use these latest funds, and what's your company outlook for this year?
Well, great question. We raised over $300 million in this particular round. That brings a total of $800 million that we've raised for SandboxAQ since our spin out. And we're focused on a number of key areas. First is product development. First use of proceeds is how do we continue to develop our products? This is enterprise software that sits on the cloud, sits on all the major hyperscalers out there. We're utilizing NVIDIA GPUs and making this happen, making this possible. We're going to invest in that product development. I mentioned life sciences already, but that's not the only area that we're involved in. We're also involved in battery chemistry, in catalysts. Catalysts are the lifeblood of industry all over the world. And so be it biology, be it chemistry, be it financial services, we're investing in these enterprise solutions that sit on the cloud, that serve these customers with large quantitative models that complement the language models out there. One way to think about this, Annabelle, is that language models like ChatGPT save you money. They cut your costs, whereas quantitative models are value creation. If you're a drug company, if you're a chemicals company, if you're a car company, if you're a space company, you want to create a lot of value. And that's the product development that quantitative models can give you. The second use of proceeds, of course, is go to market. We've been around the world talking about our different products, just coming back from Europe, now going back to Europe to the Davos World Economic Forum, where we'll be presenting there. So many companies, so many governments there. will be engaging with. And so this is a global phenomenon, the rise of quantitative AI and A&Q.
There's no specific country leader at this point in time. We see a lot of different companies and different countries, of course, that are investing heavily in this. But I want to get your response as well to what we've seen this week, and that's further restrictions on China's access to cutting-edge AI chips from the US. There are some who would say that China is maybe at least matching the US, maybe it's beaten in quantum sensing technology. What do you make of these restrictions, and how would you look at China's progress in this area as well?
Well, there's no doubt, because the prize is so big, the prize of AI, first with language AI, and now with quantitative AI, and then ultimately also adding quantum into the picture, many countries are going after this. There's going to be a number of key summits on AI coming up in UK and Europe very soon. UK on Feb 7, and in France for many different European countries coming together in Paris for the big AI summit, Feb 10, Feb 11. These will be key summits that global leaders will be coming to. I believe there's more than 80 heads of state coming to the Paris AI conference. So it has caught the world's attention. It's caught the C-suite's attention. And of course, China and other countries are going after it as well. Intense focus of the engineers, of the universities in these areas. And of course, they're looking for the chips to make this all happen, the compute to make this all happen. NVIDIA, certainly the global and dominant leader. China, for its part, having been cut off from that stream, is now developing some local abilities to develop chips on their own. And so there's going to be a very interesting arms race that we'll witness over the next 5 to 7 years as the U.S. and its allies and China begins to focus on its local development of chips. It's going to be fascinating to watch.
All right, Jack, safe travels to Davos. I'm sure you're going to be having a lot of interesting conversations next week. That was Jack Hidary there, CEO of SandboxAQ, and we'll have plenty more ahead. This is Bloomberg.
Right, so welcome back. You're watching the China Show. So bulls are taking advantage of this extremely brief and hopefully not as brief window to buy in some of the sort of battered stocks, some of your property, and we cross that with, of course, some of your sort of distressed assets, and we're seeing some gains there. Very quickly, Xiaohongshu or Red Note linked stocks on the back of, I guess, this report that Donald Trump might use an executive order to save TikTok, limit up in the onshore markets. Midland markets are doing this, Hong Kong markets too, 24 minutes into the trade, and really underscored and anchored by this broad risk rally, this everything rally that's seeing the MSCI Asia Pacific Index on track for the biggest gain so far in several weeks. Plenty more ahead. This is Bloomberg.
Welcome back to the China Show. Here's a look at the HSI about half an hour into this session. We are still up. It does look like the sort of everything rally that we saw overnight coming into Asia also playing out in Chinese equities again today, Dave. Yeah,
markets really needed that, almost a circuit breaker from the soft CPI print from the U.S., right? Seeing how, I guess in many ways, extremely crowded these long dollar trades were, these sort of short Treasury trades were. In fact, when you look at the options market, there were people who did manage to clock in quite a bit of profit overnight with those bullish calls coming in a few hours before that CPI print. So good on you. The story across markets, as we were pointing out, is really one that is seeing most risk assets on the way up, including China, Asia X. These Chinese markets is doing very, very well, including, by the way, we'll get to the Korea story in a moment, including still Korea, despite the fact that the BOK maybe chose this meeting to take stock, if you will, given the 2 successive rate cuts already going into the current or this today's meeting. The other central bank story to tell you about is a market that is coming online right now. We should have pricing already out of markets in Jakarta, and there we go. Yeah, so 2 things here, right? A pleasant surprise out of US CPI arguably a even better surprise coming out of their own central bank with that rate cut midweek. I believe not a single economist called that, but I guess such is life, isn't it? There we go. Some of your rate-sensitive sectors are on the way up, including property, which is, by the way, a story we're seeing across the region today. Speaking of central banks, Korean assets doing this. We talked about us coming off highs a little bit on the equity and the bond market, some strength coming through in the currency after that hold out of the BOK, and they'll be unpacking that, and I believe, and I would expect really the central bank governor to really feel a lot of difficult questions around why they chose to do what they did. The briefing begins in a couple of minutes, and of course we're looking at oil prices here, Rebecca, on the back of this, all the geopolitical stories, including, of course, this ceasefire.
Yeah, big story for Asian traders waking up, of course, this ceasefire. It is worth highlighting it's sort of a tentative deal and fairly similar to the one that was proposed back in August.
Yeah.
But one big difference, of course, is we have Trump coming in, potentially the most, or at least one of the most pro-Israel presidents, and perhaps Israel wanting to start on a very positive footing with Trump. Trump, of course, already in some ways advertising how well and how adept he can be at trying to sort of push forward some of these deals.
Yeah, and we're just coming off the farewell address, too, of President Biden, and I think it's interesting, the context here is President Biden then saying, the reason we're here was because of months-long, very difficult diplomatic conversations. Donald Trump then came out and took credit for this and said, if he hadn't won November, we wouldn't be here right now with these elections. And I think it's also worth noting, what does this mean for the Abraham Accords, which started, of course, in the first Trump White House right now. Okay, by the way, before
a bit of news coming through.
Yes,
more on the central banks, BOJ.
Go ahead, why don't you take it?
Well, so we did have Ueda already hinting at this possibility of a rate hike. We now see that the Bank of Japan saying that there is a good chance of that January rate hike that Ueda had already hinted at. BOJ said to depend partly on no negative Trump surprises. So again, that sort of calibration that perhaps we also saw a little bit of when it came to Bank of Korea, perhaps also calibrating, taking a beat, waiting to see what happens when it comes to those tariffs, Dave.
Yeah, we're looking at the Japanese currency right now is up quite substantially, dollar-yen down, as you can see on the back of this news. So we're 9 days away from the BOJ decision. I'm looking across my FX board just to give you a bit more context in the move we're seeing across these FX markets. And the Japanese yen, well, here we go. It's currently up against every single one of its major peers, all the way down from the South Korean won through to the Mexican peso. Okay, we'll table that story for now and talk about it. Going back to geopolitics here at politics, that's our other top story today with President Biden has delivered his farewell address, listing his achievements over the past 4 years, while also voicing his concerns about the future of the United States.
I want to warn the country of some things that give me great concern. This is a dangerous concentration, and that's a dangerous concentration of power in the hands of a very few ultra-wealthy people. And the dangerous consequences if their abuse of power is left unchecked. Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy, our basic rights and freedoms.
Let's bring in John Harney out of Washington, our Bloomberg editor. John, a pleasure to have you on the show. What were the key takeaways for you from the speech, which I believe ended about 30 minutes back?
It was his valedictory address, if you will, after more than half a century in American public life. But he drew an interesting parallel between the end of his presidency and that of Dwight Eisenhower in 1961, in which Eisenhower warned of something called the military-industrial complex. Biden gave a similar warning and called the tech-industrial complex a threat, and the rise of misinformation and the lack of standards and the lack of fact checks on social media companies. And it obviously was a criticism, I guess, of the incoming Trump administration, and that President-elect Trump's campaign was supported by many people in Silicon Valley, and he has been welcomed by people like Mark Zuckerberg, and of course the wealthiest man in the world, Elon Musk, is one of his most ardent advocates.
Thanks, John. I mean, I just want to pick up on your point there about some of the warnings that, President Joe Biden offered. He mentioned this dangerous concentration of power of a few ultra-wealthy people and the dangers of an oligarchy in America. I just want to ask how resonant you think that message is with Biden's audience, and is it something that, people will receive at this moment?
It's certainly has a audience, but similar. That some of this was the basis or formed a good part of Biden's campaign for re-election, and then after him, Kamala Harris, and while it resonated, it didn't resonate enough with American voters who were far more concerned about things like inflation and the course of the economy and immigration. So, this may be something that will be remembered going forward. This farewell address as something that was prescient, or maybe not. But it was. It was a remarkable speech from someone who's had a remarkable political career. And at the end, he said, "Now it's your turn to stand guard."
Bloomberg News editor Johnny Harney there for us in Washington. Now, we have had news overnight of a possible ceasefire deal in Gaza. It looks potentially similar to what has been discussed over the past 6 or 7 months or so, but of course coming really close on the heels, in fact, potentially before incoming President Trump takes up top office there. Both Biden and Trump, to some extent, claiming credit and their role in bringing this about. But to understand precisely what this deal might mean, some of the challenges and risks around it, let's bring in Ellen Wald, non-resident senior fellow at the Atlantic Council and president at Transversal Consulting. Ellen, just to kick off, can you talk us through a little bit on the timing of this deal and some of the potential limitations?
Sure. So the timing is obviously very interesting, given that it's coming almost immediately before incoming President Trump's inauguration, and just as President Biden is leaving office. It does seem to have been a kind of a joint effort between the two administrations, but you really cannot deny that President Trump's rhetoric and efforts have clearly pushed it to the finish line. It's kind of a long and drawn out affair in which different hostages will be released at various times, with different Palestinian prisoners being released also at varying times. There'll be a ceasefire. There'll be various troop withdrawals. It does seem that some of the details are still being disputed a little bit, but so it's not exactly signed and sealed here. There's also the matter of Israel is a democratic country, and so this deal is going to be presented to the parliament, and there will be opportunities for dissent. Though I think that there really is an incredible amount of pressure to get hostages released in any way they can. And so the fact that, there will be hostages released is a very strong a motivator for Israel to accept the deal. I think as well, though, there's a lot of concern that, they're kind of going back to square one here in some respects, that, if the deal is largely followed through, or at least if the Palestinians and Hamas and Gaza get what they want, that this just could lead them back to a situation which will precipitate further conflict, and that is absolutely a concern. And I think that the Trump administration, when they come in, is going to have to do a lot to reassure Israel that is either not going to be the case, or take some action to ensure that Hamas is not able to resume or grow to its previous strength.
Ellen, David here. I think to Rebecca's question just now as well, I want to get your thoughts on how this one might be different from a similar sort of agreement we had back in August, and how hopeful and optimistic we can be that this actually moves the needle on this conflict.
So the deal is actually quite similar to previous deals that were discussed. I do think the different factor here is the fact that there was a lot of rhetoric from incoming President Trump about really coming down hard on Gaza and Hamas if they did not return hostages, and that there's a sense that Trump is perhaps more willing to follow through on these kinds of things. Recalling from his first 4 years in office, he did really come down hard. I mean, there was, the Soleimani assassination and other issues. So I think there is a bit of pressure from that has maybe moved the needle for Hamas in some sense. But likewise, I think there's also more pressure on Netanyahu to get on the good side. I think it's pretty clear that Trump is much more, or at least has been, and in rhetoric certainly favors, it supports the Israeli side, but he clearly wants to get a deal done, get something moving in this conflict, and that does mean pressure on Netanyahu.
Ellen, I just want to ask about the broader landscape here, because since Donald Trump's first presidency, of course, the Middle East has dramatically changed. We've had the fall of Bashar al-Assad. We've had Turkey playing a more prominent role. Iran sort of arguably quite humbled. Explain to us, the environment that Trump is walking into. What capacity does he have to actually figure out a more long-term solution? He's, of course, previously talked very openly about the potential for creating peace in the Middle East. And if you can also just throw in a little bit about what that means for the energy landscape, potentially through the first half of 2025.
Yeah, I think this is not the same Middle East that he had in his first term. But in some respects, it's maybe not quite as altered as we might think. So, yes, I think Syria is a huge different, is really a different landscape. Turkey as well, you mentioned. Iran really is a different story, because during the Trump administration, the sanctions on Iran were tightened, were incredibly strong. Iran was exporting very little oil. They were bringing in very little money. And then during the Biden administration, the sanctions enforcement was much looser, and Iran was really able to export more oil, put more. Technically, it's still considered black market oil, but they were exporting more. They're bringing in more money. Then you had, the whole issue with Russia. And so Iran, Russia, Venezuela kind of became this entire alternate market for oil. And so I do think that when Trump is coming in, he's looking at Iran that's actually in much better financial shape than when he had his first term. And so I think that we are likely going, I know all of the big talk is about tariffs, or is Trump going to put tariffs on Canadian oil? Well, really, you got to look at Iranian oil, and is his sanctions enforcement going to get a lot stricter? Is he going to turn the pressure on China and other importers of Iranian oil to really crack down on that? Because that's what has the potential, I think, to alter this situation in the Middle East more, to rein in support for these, these terrorist groups. The Houthis, that's a major issue that Trump is going to have to deal with in terms of the safety of our waterways, and global trade, global transit, and then at the same time, you've got the fact that there's no longer an American presence in Afghanistan. And where does that put America at a disadvantage, or is that maybe more of an advantage? I do think we are looking at a different Middle East, and there's going to be a lot of things that this incoming administration needs to figure out that are very different dynamic from the first 4 years. And that includes, I do think we're going to see more pressure to get this, sanctioned oil actually off the market. And that could have impacts for oil prices and commodity prices across the board.
Ellen, we need to cut it short. Apologies for that. A ton of breaking news. Thank you so much for coming on to talk us through this. Ellen Walder, non-resident senior fellow at the Atlantic Council and president at Transversal Consulting. Just to the point I was just making there, the BOJ and her scoop right now is out talking, and we're seeing it play out across markets that, well, the central bank is said to have see a good chance of a rate hike in 9 days' time. That's when the first meeting of the year takes place. Dollar yen on your screen substantially lower on that. We were as low as, I'm just looking at my screens here, 155.21 is the low of the session. We were coming off a high, it's 156, right, if you consider that. As you can see, yields are on the way down, so futures are on the way up, and the yen is basically gaining against every single currency out there. The equity market, 15 minutes into the lunch break, is also seeing a reversal of highs of the day. Plenty more ahead. This is Bloomberg.
We are just looking at some lines from the Bank of Korea presser here. Of course, we had that decision that surprised many of us earlier today. They decided not to cut. The expectation was that we were going to see the third rate cut in a row, and instead they held firm. We had BOK Rhee saying that the decision was not unanimous, so one board member, including Shin, opposing today's rate decision. Now, elsewhere, President-elect Donald Trump is reportedly considering an executive order to suspend the enforcement of the U.S. TikTok sale or ban law. That's according to the Washington Post. For more, let's bring in our China correspondent, Min Lo. Tell us first, does the president actually have the power to override this? And what are the limitations if he wants to come out, as he did in his first term, with a spray of executive orders?
Yeah, it's actually not too clear at this point because, of course, the courts will be able to strike down an executive order on the basis that the president doesn't have the authority to do so. Congress can also pass a law to invalidate the executive order, and legal observers are saying that at this point, it's hard to say whether he can entirely override a law passed by Congress by a very overwhelming bipartisan support. And of course, just to give you the background, the ban or sale law kicks in a day before his inauguration. At this point, the Supreme Court hasn't come out with their final decision because they heard TikTok's challenge to the law last week, and then they had largely remained silent, although the expectation is that the Supreme Court is going to allow the law to pass as planned. And of course, the clearer path is for Trump to convince Congress to repeal the law, but of course that's going to be a very, very tough sell. Another option he has is to ask his Attorney General not to enforce the law, essentially pretending that it doesn't exist. And we know his pick for Attorney General, Pam Bondi, has not committed yet to enforce that law during her confirmation hearing on Wednesday.
What about updates around other options on the table, including divesting the app?
Yes, of course, that's an option because the law says that TikTok will be able to continue operating as long as the foreign owners is able to execute an acceptable sort of divestiture. And what constitutes an acceptable or appropriate divestiture is really up to the president to interpret. So Trump has some leeway here to facilitate a deal. And if you recall, back in his first term in power, he was the one who tried to force a big sale of a big stake of TikTok to Oracle, and he wanted the U.S. Treasury to get a cut of that proceed. And so this is something he could try to pursue this time around. Of course, there has been reporting that Elon Musk is possible as a candidate to buy out that app. So have a listen to what Kellyanne Conway, who was Trump's advisor in his first term in office, had to say about this potential deal.
I'm not surprised that successful entrepreneurs and a social media giant himself, Elon Musk, would be exploring this possibility. There are others also exploring the possibility, but we'll have to see what happens. I know President Trump saved TikTok in his first term when they were threatened to remove the app from.
Will he do it again?
And he wants to save TikTok again.
So I want to caveat that TikTok had actually dismissed any talk of discussion with Elon Musk as pure fiction at this point. And of course, another complication is that Beijing has added TikTok's underlying algorithm into its export control law, which essentially prevents the app from being sold together with its underlying technical backbone.
That's Bloomberg's China correspondent Min Lo with the very latest on the drama at TikTok. There is plenty more ahead on that and more. Stay with us. This is Bloomberg.
All right, just further updates here coming out of this ongoing briefing out of the BOK. This is very complicated because they did something the markets were not expecting by not moving on rates, but now they're clear on the guidance over the next 3 months that they are all open. All 6 members of the board are open to a rate cut, which obviously didn't come today. And it seems, looking at the headlines coming through and his comment, a lot of the reasons why they did not move was a currency that they now think is actually weaker than necessary. So dollar Korea, higher than economic fundamentals. The won is weaker than necessary is what they're saying.
It was a very delicate balance for them because on the one hand, there is this risk that they face criticism from economists that they didn't act and they didn't act fast enough to try and improve the economy. The overwhelming expectation was for a rate cut. And it's partly because we've seen things like the business and consumer confidence tumble to the worst since the pandemic. So although there is this weakness in the currency, there is also this urgency to try and get the economy on a little bit firmer footing here.
Yeah, I mean, to be completely frank, it hasn't been a very good 48 hours for economists out there. Very few saw this coming. Nobody saw the BI, Bank of Indonesia, cut rates yesterday, all to the surprise of the central bank theme. And just in the last few minutes, in case you missed that, it now seems that the BOJ might see a strong case to hike interest rates in about 9 days or so. All right, so that's a market story for now. We're continuing to track sort of idiosyncratic moves across individual markets on the back really of, by the way, a very good day for risk assets, generally speaking, as U.S. inflation continues its disinflation trend. That's according to the latest numbers coming through. Plenty more ahead here on The China Show.
It's 11:29 a.m. in Tokyo. Japanese markets just about to go on a break in a minute. But of course, that follows this nice Bloomberg scoop we had. The BOJ said to see a good chance of a January hike. We had Ueda already hinting at that. Had a bit of strengthening in the yen here in Japan. And just a touch higher, or sort of unchanged elsewhere, let's say that. For more on that market action, though, let's get back to Bloomberg MLive strategist Mark Cranfield in Singapore. Mark, just talk us through a little bit about how investors are absorbing this news. What is the BOJ trying to do here?
It sounds, if you look at what the BOJ speakers have been doing this week, it started with the Deputy Governor, Yoshino, earlier in the week, followed up by Governor Ueda yesterday. It looks very much as though those guys want to go ahead with an interest rate cut next week, but they need the majority of the BOJ voters to follow them. Last time in December, only one person voted for the rate hike that time. They need to get a majority out of 9 to do so. So they're doing as much as they can, planting stories in the media. We're being very helpful in that respect. And they're trying to rally the troops so they can cross the line next week and raise interest rates. Everything, all the economic data that they've been looking at, whether it's inflation, wage hikes, whatever it is, has justified an interest rate hike for some time now. They just need to get on and do it. Of course, they're partly scarred by what happened to Japanese markets in August. After they raised interest rates at the end of July, we saw the big collapse in Japanese equities, and there was lots of flack to the Bank of Japan because of that. Conditions are much calmer now, so they're hoping they can push it over. Now, the remarkable thing is that the pricing odds from traders has gone up to 85% now for next week's decision, up from just 40% a week ago. So that's a remarkable change. People are actually being convinced that the Bank of Japan is going to do it. Probably the one missing element that we haven't seen yet is a story in the Japanese media, which you typically get a few days before the Bank of Japan. If it's already been more or less decided, you normally get a story in the Japanese media that pretty much says it's a done deal, and then everybody can say, yes, it's as we expected. We haven't seen that yet, but there's still a few days to go, and it may well come out over the weekend.
Mark, how much more downside do you think this opens up on dollar yen, particularly against also the other side of the equation? And the timing for the Fed's next rate hike has been brought forward to July.
I think it very much is a situation of what is going on at the same time. So when the Bank of Japan meet next week, don't forget by then Donald Trump will be in place. He could, at the same time as the Bank of Japan is making whatever decision they do, we could be hearing new elements in terms of tariffs or whatever it is, new policies from Donald Trump at the same time. They may be dollar supportive. If it is a quiet time, if the Bank of Japan goes ahead and raises interest rates when it's a quiet period, in terms of, or Donald Trump has already got this stuff out of the way, and they're not competing with other news factors, dollar yen could go down quite a way. It would be the only story for traders to focus on. It depends how many other things traders need to focus on at that time that might be dollar supportive. The yen story clearly is going to be a positive one, because not only, don't forget, it's not just about hiking interest rates next week. Bloomberg Economics expects 3 raises this year to get rates up to 1% for the short-term rate. So it's the beginning of a trend, and it's quite likely that's how the Bank of Japan will position it. They will say, we're hawkish now, but we're going to stay hawkish right the way through this year until we get the rate to something like we consider to be neutral for Japan, which is nearer to 1%. But it does depend, in terms of foreign exchange market, it will depend on what else is going on in the world, and that really is very much from the American angle.
Mark, just your thoughts on this ongoing briefing in Seoul with all these lines coming through out of the Bank of Korea. I think they're trying to massage this message that this pause was not the end of the easing cycle, but they're simply just taking stock of what's been taking place. What does it mean for FX markets?
Are we allowed to say shambles on TV? I mean, this is a complete joke. I mean, traders can't believe what they're hearing there. Just get on with it. You've got everyone in favor of doing the interest rate cut. Just do it. I mean, you're causing more damage to the market by just putting out all these contradictory statements. It's really not helpful at all. And the currency will probably suffer because of, you've got this disconnect between what they're saying and what they're doing. Currency traders don't like this sort of thing. They're trying to stabilize the currency, and they're making it worse.
That's Bloomberg MLive strategist Mark Cranfield in Singapore there for us. Now, elsewhere, in other world news we are tracking this morning, Canada is said to be preparing to put tariffs on about $105 billion worth of US-made goods if Donald Trump carries through with his own trade threats. Our source says the list will only come into play if Trump moves first and may be expanded later depending on what the US does. Prime Minister Justin Trudeau has met with the premiers of Canada's provinces to discuss the tariff issue. And Hindenburg research founder Nate Anderson says he is shutting the short-selling firm. In a post on the Hindenburg website, Anderson says there's no specific threat, health or personal issue behind the decision. The firm's first high-profile report came in 2020 against electric truck startup Nikola. It was most recently known for its 2023 report against the Adani Group. Hindenburg has also gone after major financial figures, including Carl Icahn.
Okay, let's get to this Bloomberg scoop. And the Hong Kong government is said to be exploring options to raise taxes on the very highest of earners here in the city for a second year. That's to plug this budget shortfall. Now, sources say officials have floated raising this, 16% tax rate on those who are earning just over $640,000 US. Let's bring in Kian Wong, of course, who broke the story for us to talk us through I guess there are lots of options on the table to plug the shortfall, but this is really one of the things that is catching the attention of people. What is the logic behind looking at this specific tax rate?
Well, Hong Kong is obviously heading to another tight year, and we all know that the land sales was traditionally a major source of revenue, but then it's very weak in sales recently. So the government has been scratching their heads how to increase the income and also cut expenses.
Very nice scoop here, Kian.
Thank you.
Tell us a little bit about the potential pushback to this and some of the other options, if this doesn't go through for whatever reason, some of the other options that the government might be considering right now.
Well, naturally, people don't like high taxes, right? Especially those so-called kings of employees. So the other options would be to cut expenses, like the financial secretaries and the other officials keep saying that they're trying to rein in the government expenditure, freeze headcounts, and then maybe increase other types of fees. I mean, those are among the popular options that people have been proposing, but we are not getting a very clear visibility as to which option that they weigh the most. But again, this tax hike, the impact is rather limited to those some 12,000 people. Then it could be adhering to the principle of those who can afford should pay more. And that's how the story that we are hearing from the street right now.
Yeah, and I think 2 days back, right, at the Asian Financial Forum, you were there too with, Christopher Huynh. He couldn't tell us a lot because obviously they're still deliberating all these things ahead of the budget. But we got a sense that they would focus in on the cost side than they would on revenue. So I guess what other options are on the table here for the government?
Well, just yesterday, for example, Regina Yip's political party proposed some of the raising, for example, traffic-related fines. I mean, those would be one of the other avenues that people are proposing to increase revenue. And cost-cutting, as I said, people have been floating the idea of freezing the civil servants' headcounts, freezing their salaries. Those are the options that are proposed by the members of the public or various associations. So I'm sure that the government is thinking a lot on that.
That's Bloomberg regulation reporter Kian Wong there. And you can get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter. That's out every Thursday. You can sign up via bloomberg.com/newsletters.
Right, welcome back. You're watching The China Show. Welcome to just the back half of the second hour of the show. Lots to get through. It's been very, very busy here. We're looking at shares of Rhee and its various iterations here in Hong Kong. On the up, we did get, of course, some headlines coming out of the company here that effectively they see growth after a very limited biosecure impact, which really underscores perhaps the dialing down of the regulatory risk as it pertains to this incoming White House. Donald Trump, of course, takes office in a few days. Let's get more on the outlook for the company, for the sector, and the various other hotspots, including Europe. Joining us here on set is the head of Asia Healthcare Research at Jefferies, Cui Cui. Good morning and nice to see you.
Thank you, David. Thank you for having me here today.
Well, we are very looking forward to having your insights on many of these fronts. Wuxi is one of your top picks.
Yeah.
I guess we'll take a step back from the company itself. What are your expectations for the regulatory climate in the U.S. for companies like Wuxi?
So great, because we know that on January 3rd, the Biosecure Act finally expired, right? So I think it's a surprise to all of us because it shows that they did some good thing regarding the lobbying to the U.S. government. But the thing is, because they cannot direct reach to the Senate, right? It is their counterpart, which is the U.S. pharma companies, which are helping them lobbying to the U.S. government. So I think going onward, we should see a very positive order growth momentum because this U.S. pharma companies, they are wanting to continue or resume business partnership with WuXi Biologics.
Okay, so potentially a bit of a bright spot when it comes to the US and regulation amid what is otherwise quite a difficult outlook when it comes to tariffs and so on. The EU is a slightly different story. We have this probe finding that, as they had indeed sort of hinted, they do believe that China discriminates in the process of medical device procurement. Just tell us, I guess, this divergence, lay out this divergence between the US and the EU and how you expect that to play out over 2025.
So this is a very good question. So from the EU perspective, they claim that China has discrimination regarding the procurement for medical device companies. But I want to do a few defense here. So first of all, Chinese government has made some decent effort regarding to ensure a more fair procurement process. For example, as long as you have manufacturing localization, you are treated as a local manufacturer. For example, Siemens or Philips, they're treated local rather than importer. And also because for EU, China still have a trade deficit for 36 billion RMB regarding the medical device industry. So I will say this investigation, I think, is less likely to be further escalated.
Yeah, and I think that's important. Why does China consider these foreign names to be made in China? Like, what sets them apart? What have they done to actually encourage them being labeled as such?
Yeah, so very important question, because they want to encourage manufacturing localization. So same as the other industry, such as the EV, Tesla. So it's the same happening in China at this time.
And just to turn back to the US a little bit. So the end of this Biosecure Act, we've mentioned Wuxi.
Yeah.
Explain a little bit about where we might see the other beneficiaries for this.
So aside from Wuxi, I will say the overall Chinese CDMO industry will be beneficial for this. Because the thing is, for Chinese CDMO companies, they can help in the US farmer to save costs by 30 to 60%, which is quite important because we believe going onward, lowering the drug price in the US has become one of the top priorities for the government.
Right. And who would be best positioned to take advantage of that among the Chinese names that you cover?
I will still say Wuxi Biologics, because after a very depressing 3 years, now we are very excited to see that they are back on track for the CapEx expansion cycle, which is quite important for service providers such as Wuxi.
Understandably, though, there has been quite a lot of nervousness, not just around Wuxi, but around this sector. What do you think it will take to see, I guess, sustained momentum in gains for that cohort of names?
Yeah, so I think now we are at a pivot point. For example, Wuxi Biologics, after the expiry of Biosecure Act, now the market focus is back to the new order growth for Wuxi going into 2025 and 2026. And I'm more confident on that because those kind of pharma companies that's helping Wuxi lobbying, I think they are the ones that giving Wuxi new orders, right? And starting from the domestic perspective, because last year we also have a lot of like the anti-corruption campaign and also some pricing pressure, I think the impact has been largely stabilized. So it should be good for the China healthcare sector in 2025 as well.
What about the domestic market and how your outlook for how that looks for these players? What are the key trends you're watching this year?
So great. So first of all, we see a very positive trend that the national reimbursement list now there have higher tolerance for drug price as long as you have clinical superiority. So that's why. And in the meantime, they'll kick out some outdated drugs. So this is a very smart move. And on the other hand, we also see the liquidity improvement going into the market. For example, the global biotech funding has already recovered to the pre-COVID historical high level, which is a very good sign. And also we do see a lot of Asia companies that they're coming to Hong Kong for dual listing.
Just to pick up on that quickly, I think we saw a rally. You might have seen the rally this week in some of the pharma stocks, Beijing, Hansoh, Innovent Bio, right? I think it's the point you're making.
Yeah.
Do you expect that list of medicines and drugs that's covered by insurance, does that expand to include some of these innovative medicines?
Yes, for sure. Because, for example, last year we include the Enhertu, which is Daiichi Sankyo. So the annual cost is like 240K RMB, so which I think is a breakthrough for the national reimbursement drug list, given we're still under budget control, right?
That's Cui Cui, Head of Asia Healthcare Research at Jefferies there for us. There is plenty more ahead. Stay with us. This is Bloomberg. Now, a record 600,000 people traveled to South Korea for medical procedures in 2023, but a boom in beauty-focused treatments is resulting in a shortage of general practitioners and hospital doctors. Global Business senior reporter Wan Ha joins us now. Wan, you were able to go to Seoul, report on this story. You did the very brave thing of, in fact, going to talk to a cosmetic surgeon, which I'm not sure is something that I would do. Tell us about what you found. I mean, there's a real influx of Westerners and really global tourists going to South Korea for treatments.
It really is. You know, I toured Gangnam, which really is the heart of the plastic surgery capital of the world. And every single high-rise that I went into, I mean, it's full of dozens and dozens of skincare clinics, dermatology centers and plastic surgery centers. You know, I met up with this company called Seoul Guide Medical. They basically are a medical tourism agency licensed by the government, and their job is basically to bring in foreign patients into these clinics. Last year, they said they brought in 10,000 foreign patients from places like the U.S., from Europe, you know, as well as Japan and Australia. Their business has grown 4 times. So the boom is just incredible. And all of this is, of course, being facilitated by the government, which really wants to build up South Korea as this medical tourism hub because it brings in billions of dollars. And we're not just talking about, you know, these clinics or these surgeons, but really it's a whole ecosystem of industries that really are thriving because of it. We're talking about equipment manufacturers that make all the, you know, laser devices. We're talking about the manufacturers of these serums and injections and Botox that are being used.
And this is taking place against a backdrop. And I want to get to the talent part of this, right? The doctors, for example.
Exactly.
And we know, of course, some of the long hours that they've faced, and some of them have walked out of emergency rooms. Tell us about that situation.
Yeah, I mean, South Korea has long been plagued by this doctor shortage, and it's really astounding when you are in the middle of it because, you know, this is a center where you've got the most number of plastic surgeons per capita in the world, right? And literally, you have people, Koreans, dying because they're being refused by hospitals who can't take them in the emergency rooms because there are not enough doctors in there, right? I mean, it's really astounding to really think about that. There's something out of whack there. And so, you know, in February, last February, when the government proposed this plan to really address this shortage, and it was in some ways a very maybe too simplistic plan of basically raising admissions for medical schools. The doctors were all up in arms about it because they say it doesn't solve the structural problems that really underpin the problem, right? You've got overworked doctors, underpaid residents. You've got this medical health insurance system that really gives very low reimbursements to hospitals and really barely keeps them afloat. And all of that, of course, is in the backdrop of this boom, and that's really driving doctors and surgeons to dermatology, to these very lucrative, you know, fields outside of the national reimbursement system. So there's fundamentally things aren't being fixed as a problem in South Korea.
So on the one hand, you have the shortage of doctors, a sort of brain drain, effectively moving to another part of the industry. The other issue, though, for the government, they're trying to fix that shortage problem. The other issue is that the cosmetic industry and this whole sector is actually a really critical part of the economic growth in South Korea. You know, we had the surprise of no rate cut today, and just bear with me, I'm going to bring it all home that David and I have been talking about this all day, but really underscoring some of the challenges for the Korean economy, this whole question, can they get it back on its feet? So I want to ask, you know, with all of the other political turmoil that we've seen in South Korea, of course, we had bad news about airline. You know, does all of that change how people view the prospect of going? Does it risk dampening this sort of flow of people going to South Korea and kind of helping boost the economy?
That's a very good question. I think it's a huge concern for the Korean government at this point. I mean, soon after the martial law debacle, I mean, you had you know, appointments at hospitals being canceled by foreign patients, right? I mean, 20% of those appointments were being canceled was what we were told. You've got the Minister of Culture really expressing concern that tourism overall might, you know, be falling this year. And Bloomberg Intelligence estimates that Chinese, which constitute the biggest block of visitors to South Korea, might see a decline of as much as 19% this quarter because of this political turmoil. So, of course, there's all of this concern of how this is going to affect tourism. And, of course, medical tourism is a big part of that. I mean, if you look at the numbers, the medical tourism business brings in so much money per billions of dollars, every single year. And that number, of course, is on the rise. But, of course, now it's perhaps at risk because of what's happening.
There we go. Wan-ha, thank you so much. Our global business senior reporter on this big story, of course, we're tracking within the Korean markets. Yeah, well, at least the doctors are cutting. Someone is cutting because the BOK did not. More on the BOK and some of the lines coming through. Let me end the show on this right now. And it's rare that you see the BOK talk about specific levels, that the currency markets, they say, is weaker by about 31 because of the political turmoil. That was really one of the considerations, a weaker currency, perhaps why they did not cut. But certainly to Rebecca's point, they're trying to strike this very fine balance between stability and supporting this economy. Frankly, as to the point we're making, still needs it. Plenty more ahead. This is Bloomberg.